England cuts their benchmark interest rate to a record low 25 basis points while promising to buy more government and corporate bonds. Also on the program, Adrian Day of Adrian Day Asset Management joins to discuss the Brexit, its consequences on European banks, and also opportunities in precious metals. This is the Power and Market Report for Thursday, August 4th. Lou, coming to you now from the Boston area, just returning from my trip to Vancouver to attend two conferences, Capitalism and Morality and the Sprott Natural Resource Symposium. It's great to be back, and I have a fantastic show for you today. Markets got a little boost today with the Bank of England cutting its benchmark rate. Gold did not move too much, though, up $2.20 to $1366.90. Silver was down almost 0.5%. We saw oil jumping about 2.25% to $41.76. Asia was up across the board, but the Nikkei kind of leading the charge there, up 171 to 16,254. And of course, in Europe, the cut giving a boost to the DAX, FTSE, NCAC, all of those up. The DAX was up 57 points to 10,227. That's about 0.5%. The FTSE was up about 1.5%, and the CAC was up about 0.5%. Here in the U.S., a little bit of a bump, but actually the Dow has pretty much given back any gains it had early this morning, and we're closing pretty much even. Same with the S&P and the NASDAQ. So it's the same old, right? Pulling that money lever. The Bank of England there trying to avert a crisis. And the Fed, of course, no one believes that they're going to raise interest rates at this point. So this will be interesting to watch. I guess we have also a jobs number coming out. Interesting to watch how they try to spin this. It's hard to argue that the economy is strong when central banks are easing and engaging in quantitative easing, which includes buying corporates at this point. So we'll watch that. But today, I'm really excited to bring you an interview with Adrian Day. I caught up with Adrian at FreedomFest, and what a great guy to talk about what's going on across the Atlantic in England and in Europe. So we had a very nice discussion on that. And going into the Sprott conference, I wanted to get his feelings on precious metals. He runs a very successful mutual fund over at Euro Pacific Capital. So I wanted to get his feelings on that. And just, a word about Adrian. He's just a fantastic guy, always a gentleman, always very nice, thoughtful. And, I've been in this industry for about 4 or 5 years as a retail financial advisor. And my experience has been kind of mixed, and at times I'm not very impressed with what I see in my peer group. Just the overall performance, the service that's delivered. Not always the smartest guys, I hate to say it. But Adrian is one of those guys who makes me feel really good about what I'm doing, because he's just like I said, a great guy, extremely knowledgeable, extremely bright, is very good at taking care of his clients. And, if you watch the show, you know that when I have him on, he always delivers a really nice interview. He did a talk at the Sprott conference in the big conference, the big room, and that thing was just full. They packed the room to see Adrian Day, so I feel very fortunate to have him once again on the program. So here is my interview with Mr. Adrian Day. Sitting down now with Adrian Day at FreedomFest 2016. He is the CEO of Adrian Day Asset Management and a great friend of the show. Adrian, thanks for joining me once again.
Thank you for inviting me.
It's great to have you here. Adrian, let's start off with the stock market. I know today, as we record, it's Friday and things are pretty much flat, okay? But we've had a tremendous rally after the Brexit, hitting all-time and yearly highs on the U.S. indexes. Just want to get your thoughts on this. What do you think is driving this rally, and is this going to be a sustained bull market, or is this just a transient or ephemeral party that they're having in the markets based on some comments of a central banker?
Well, I think it's clear that what we'll call the post-Brexit sell-off was grossly overdone, particularly when you look at countries like the United States and also most of Asia. I mean, it doesn't really matter fundamentally, certainly not at the moment, whether Britain's in the EU or not in the EU, to the U.S. economy and Asian economies and so on. So I think there was a sense that was grossly overdone, and then along with that, of course, you had the central banks make very clear that any hint of interest rate increases was pushed further down the line, and so easy money drives the stock market. I personally think that that's what's been driving the stock market for the last 6 months, really. It's just easy money. The fundamentals have long passed, and of course we had very poor corporate earnings. Corporate earnings actually down in the first quarter. So it's certainly not earnings that are driving the market, it's easy money. And so now with the central banks again, on hold and pushing rates down even further, in Europe, as you know, most economies now have absolute historic low time interest rates. Britain's interest rates are at 400-year lows, same for Holland and so on. And that's, unfortunately, that's positive for the stock market.
Right, so we see something of a sort of a virtual easing here in the U.S. in the sense that, a hold is the new cut, and they've been backing off the sentiment. People think that we're definitely not going to have a hike in 2016. Others are saying not even in 2017. The Fed is just out of play for that long. Bank of England has been rumbling as if, they are ready to act, I guess, if necessary. And then you have the Bank of Japan. Those seems to be the big three that are rattling the saber. So what do you think about the Bank of England? Do you think that they will find it necessary to respond to this?
I don't think they need to. I mean, personally, I think there's been an awful lot of fear-mongering about the economic effects of Brexit. Now, clearly there are some effects, and we can talk a little bit later perhaps about, different scenarios. But I mean, the mere fact that Britain is outside of the European Union, some of the fear-mongering has just been extreme, and I think the most extreme of all was Mr. Tusk, I can't think of his first name, the chairman of the European Commission, who said that Brexit was the beginning of the end of Western civilization. Now, if that's not an overstatement, I'm not quite sure what is.
I think they have a rather perverted view of what civilized is. So it may be the beginning of the end of the EU.
Well, and
their idea.
Exactly, an overinflated sense of the importance of the EU. Yes.
Absolutely, if that's your idea of what civilized society is like. You've been here. You're obviously from England, but having lived here for several decades,
yep.
Do you still feel an attachment to, I guess, the sentiment that was driving the whole Brexit?
No, absolutely. There was actually a referendum in England on the EU, not the EU, the EC then, EEC, the Economic European Economic Commission, which was purely an economic union back then, a free trade zone, and there was a referendum on that in 1974. So just at the time I was leaving, so it's kind of ironic. And Britain, referendums, as opposed to referenda, because it's not a Latin word, so it should be referendums.
It's Greek. Is it Greek?
No, it's a made-up English word.
Made-up English. Those are good.
Yeah. And so from about 4 centuries ago. So I believe.
Okay.
And so these are alien to England, completely alien. We've only ever had 2 in our history, both of them on Europe. I think it was a huge political mistake, frankly, for Cameron to call a referendum. I understand why he did it, why he had to. So in answer to your question, yeah, absolutely, I feel a great attachment. I mean, I should, I'll probably get arrested by NHS or someone, I don't know, some department, but when people ask me, where I am. I'm from England, and then I'm English. I'm not American. I'm English, for better or worse. Yeah, and I would have voted to leave for sure, no question. And it was primarily a matter of sovereignty. Of course, there was concern about immigration, and immigration got a lot of the play, largely because it was ignored by the Remain side. And so, anytime you ignore something, and then there's an opening for opponents, it becomes even more vociferous than perhaps it would otherwise be. I don't know if I expressed that very well, but perhaps you know what I mean. So, when you looked at the Leave and Remain campaigns, they were talking about the economy and this, that, and the other. But by ignoring immigration and by ignoring it for so long, it allowed the vociferous opponents to take the lead. But the main issue was truly sovereignty. The issue of British laws being overturned by the European Commission,
Right.
which is an unelected bureaucracy. It's perhaps a parallel, not a very good one, as though some law made in California could be overturned by the Department of Agriculture. Not by the Supreme Court, not by Congress, but by the Department of Agriculture. British laws can be overturned by the court in the European court, not just British, of course, but for all of the countries. And people really resent this because the truth is, in Europe, a Greek, an Italian, a British, they still feel Greek, Italian, British long before they feel European.
Right. A lot of people are thinking that the way that the vote played out, with basically London area, Scotland, Northern Ireland, I forget which way Wales went, but basically Remain was mostly there, that this sets the stage for another Scottish referendum.
Yeah.
What are your thoughts on that?
I think that's quite likely, but I don't think they're going to do it anytime soon. Because, you've had one referendum. The government certainly feels no need or urgency to have another one, because we've had a referendum, Scotland lost, okay, that's the end of the question. So it's going to have to be a lot of pressure from within Scotland, and I don't think the Scottish, the independent, the government up there, the local government up there, want another referendum unless they are convinced they're going to win. I don't think they would win at the moment. I really don't, even after Brexit. So I think it might take a little while before we have another one.
Okay. In terms of the economy and investing, you see banks taking it quite hard, as London being, well, first of all, you have British banks that have been battered already, partially socialized, and they're, what a horrible time for the Brexit to happen for them, as they're trying to basically roll these off the government's balance sheets. But also you have a lot of multinationals that use the UK as a gateway to the common market.
Right.
So it seems like banks are going to suffer it all quite a bit. What are your thoughts on that industry? How have you been positioned in that particular sector of the economy?
Well, and also, of course, not just the British banks and also, foreign banks that use London as a gateway, but also, of course, some of the European banks, like the Italian banks, because of concern that if Italy were to leave, that would hurt those banks. The banks obviously would be hurt a lot more than the beer companies.
Right.
We have not been in the banking sector actually in our management program. We haven't been in the banking sector for, oh my gosh, years. So we didn't catch the big rally in the US, but we haven't been here for years. We do have a couple of Asian banks. We own shares in United Overseas Bank, the Singapore bank, which is a super solid bank, and good recovery prospects, because the Singapore economy, as you know, has been a little bit soft, shall we say, not in a depression, but it's just been a little bit soft recently. And the Singapore government has actually got a little bit of stimulus going, nothing like QE4 or anything, but just mildly stimulative, and UOB is probably a bank that should benefit from that more than some of the others. So anyway, we've been in that, and some of the Hong Kong banks. But pre-Brexit, we had basically nothing. I would not really look to get back in. I've looked at the banks, as a contrarian.
Right.
Anytime something's down, you look at it.
Yeah.
But just because it's down doesn't mean you have to buy it. And I just decided to pass. The one we are looking at is a little bit aggressive, would be Standard Chartered, which is, of course, a London-based bank, but very little business in Britain, or Europe for that matter. All its business is in Asia, the Middle East, and the Middle East.
Right. I recall Standard Chartered was one of the banks that was, long before Brexit, was actually thinking about moving headquarters to Hong Kong.
Yep.
Just because, not because of Brexit, but because of the implementation of Basel and how the banking authority basically in the UK is quite strict in terms of capital and these types of things. So they were already kind of half. I don't know what happened to that, but they were already half out.
Yeah, Standard Chartered and HSBC, which was the other one, both decided to stay.
They did.
But I wouldn't. But without an awful lot of enthusiasm, frankly. So I wouldn't be surprised to see that revisited by Standard Chartered. I don't think HSBC will revisit it just because. That's a much more bureaucratic bank. They spend, countless amounts of time and effort and studies looking at something. They've decided not to move. I don't think they're just going to say, well, hey, that was last month, this month we will. But Standard could, and when you think about it, Brexit, why should Brexit really affect a company like Standard Chartered? I mean, why should it? If anything, the banking regulation in England will probably ease a little bit to make sure they don't get banks leaving, the foreign banks leaving. So they'll probably ease the regulation a little bit to try to maintain the banks in Europe. They've already cut they're talking about now, the government is saying they're going to cut the corporate income tax to 15% or less. So they're trying to make it attractive for people to stay in England. Why should Brexit really affect Standard Chartered? They don't get earnings except from Eastern Europe. They get some from Eastern Europe.
Okay.
But that's not actually a recommendation, I should say. We haven't really finished our work. I'm just saying that's one I'm looking at.
Right. Now, what are the prospects for a recession, a UK recession as a result of this?
A UK recession?
Yeah.
I think an awful lot, frankly, really does. Well, there's two answers to that. Housing, don't even forget housing. An awful lot depends on the attitude of the French and Germans in particular, but Europe, in their negotiations with Britain. If they want to punish Britain, as some seem to, not so much Germany, because Angela Merkel understands what side her bread is buttered on. German exports.
They sell a lot of
Britain.
BMWs in the UK.
Well, they're twice British exports to Germany.
Okay.
So, but certainly, certainly for French, for Belgians, for the European bureaucracy, they seem to want to punish Britain. If they punish Britain, then that could obviously have, negative consequences. If they say that all British goods have to have a 10% tariff, for example, that's going to hurt. Theoretically, it shouldn't hurt. I mean, theoretically, there should be no major disruption other than housing. Now, the housing market was already way overblown in England and the southeast, not in the rest of the country.
Right.
Way over the top. And we've seen this before with the housing market in England, in London. And when it falls, when it's going up, people say, well, it's always going to go up because there's only limited space and they're not making any more. And London is a great city after all, and so on. But when it falls, it can fall 50, 60, 70%. It's happened before. That would have an effect on wealth in England, and it certainly would have a negative effect on economic statistics.
If I may interrupt. Speaking of property, have you been following the UK property trusts?
Yeah.
So what do you see there? I mean, there was several funds basically halting redemptions. Last I checked,
Yeah.
Up to, I don't know how many, 5, 6, 7 maybe.
Yeah, last time I saw it was about 5, I think, but certainly 5 of the bigger ones. Yeah, I mean, look, it's unfortunate, but I don't see that as particularly unexpected or disastrous, because after all, if you've got an insurance company that's actually holding properties in their trust, and there's liquidations, they can't just go out and dump a property to meet redemptions. With stocks, with bonds, you can sell. It's a liquid market. So I don't think it's unexpected that people would put a block on withdrawals, at a time of turmoil like this. I just hope it doesn't last too long.
Yeah.
Because you obviously want the market to function.
It kind of speaks to the optimism that these people weren't carrying enough liquidity to basically sustain this type of a hit to their...
Well, yes, and some of them, of course, have been. I mean, most of them were, because if 5 are hurt, or 5 are stopping redemptions, the majority are not.
That's true.
Right.
That's true.
But I also think you're right. I mean, there was, yeah, as I say, there was optimism that property prices would just keep on going up forever.
Yeah. So I guess property kind of stumbling not only in the UK here, we see it in the I guess more attractive markets. You see reports of volume slowing down, but a sector that's doing very well right now obviously is precious metals.
Yeah,
We've had a tremendous two-quarter run on gold and silver, as well as gold stocks. So what do you think is behind that? Do you see it continuing the rest of the year?
I think so. I think you've got a few things behind it. Number one, obviously, is the easy money and the repeated reinforcement that rates aren't going to go up anytime soon, as we just said. I mean, it's just pushing further and further back. That's obviously very bullish for gold. Brexit was another bullish thing for gold, because not so much Brexit itself, but the uncertainty it creates in Europe. Both, we've already talked about in negotiations with Britain leaving. Are they going to be friendly or hostile? They're going to try and punish Britain. But also the impetus that the Brexit vote gives to the anti-EU movements in Italy, in France, in Holland, and even indeed in Germany. Now, I don't think Germany would ever vote to leave the EU, although it should. But there's a strong sense of disgust at the ongoing transfers to Greece, and also to the sovereignty issue that I mentioned.
Yeah.
So there's a lot of uncertainty there, and uncertainty is good for gold. I think why it's done so well, though, is because there are so many investors on the sidelines. We've had a 4-year bear market. In 4 years, if you didn't sell, you probably weren't going to. So gold, and gold shares in particular, had moved into stronger and stronger hands, and there are so many people on the sidelines, individuals and institutions, who want a position in gold but want the right time to get back in. I can't tell you how many times I hear that from people.
Yeah.
My clients, my prospects, different brokers tell me the same thing. They've got people who say, yeah, I think I've missed it now, but I'll wait for a correction.
Right.
And that's why the corrections are so short and shallow.
Are you seeing significant fund inflows into you co-manage the Euro Pacific Gold Fund?
Correct.
The fund. I know ETFs are experiencing tremendous inflows.
Yeah.
Well, what about the gold?
Sure. Well, I thought you were going to ask me about the individual accounts. It takes a little longer for a person to decide. Even if the amount of money is the same, when they give a manager money to invest, they're sort of turning over the power to invest. So it takes a little longer for someone to do that, I found. So we've had a few new accounts, but not a lot. But in the fund, the inflows have been quite significant, particularly, funnily enough, very little in January, February, March.
Okay.
But in the last couple of months, the inflows have been quite good, and I think they'll continue. I can say this, I think, we were the number 1 gold fund in America in the first 2 quarters.
Congratulations.
So, well, thank you. So I think we'll get, I think that'll also boost the flows.
Right.
Yeah, people are beginning to look at gold.
The mining stocks have been phenomenal. What do you see sort of the latter half of this year? It's a very short, obviously impossible to predict with high accuracy, but your gut feeling right now.
Well, if gold continues to go up, the stocks will continue to go up. No question about that. But I think what you tend to get after the initial phase of a gold move is you start to get a little bit more discretion between what I'll call the good companies and the bad companies. Now, at the very beginning of this rally, everything moves, all of the big cap stocks move, but the ones that move even the most are the most leveraged. Most leveraged means highest debt, most marginal mines, short life mines. They're the most. So you look at a company like Harmony up 300%. Now, no disrespect to Harmony, but if you were to name your top, the best 5 gold stocks in the world, Harmony would not be on that list. Shall I just put it that way?
Yeah.
And so as the market begins to continue, then you get discernment among, well, which are the better companies with better management, stronger balance sheets, not most leverage, but stronger balance sheets, more of a pipeline, less problems at their assets. And so the market starts to differentiate. It particularly does that, of course, among the juniors.
Right. Still way off our all-time highs.
Oh, yeah, absolutely. Right? I mean, you look at a company like Goldcorp, up from 11 to 20, down from 63. I mean, yeah. And if you look at and of course I'm a value investor rather than I look at value more than price. But if you look at the valuations of the gold stocks, the senior gold stocks, any valuation metric you care to look at, price to cash flow, I won't say earnings because most of them don't have earnings, but price to cash flow, price to ounces in the ground, price to production, price to book value, which, is a little meaningless, but you look at any one of those you care to look at, and this recent rally in the last 6 months is but a blip on a 20-year chart. We are still very close to the bottom.
Okay, I think we'll leave it there, Adrian. Can you tell the viewers where they can find out about your asset management services and also your funds?
Sure. The asset management would be Adrian Day Asset Management.com, or an email would be assetmanagement@adrianday.com. The fund is EuroPacificFunds.com, EuroPacificFunds.com.
All right. Adrian, thank you very much for joining me here at FreedomFest 2016. And I'd love to catch up with you again sometime, perhaps even in a couple weeks when we're both at the Sprott 2016 conference.
Should be a good one.
All right. Thank you very much.
Well, thank you.
Hi, I'm Albert Liu, host of the Power and Market Report. If you enjoyed this video, I invite you to subscribe to my channel by clicking the button on the top left of the screen. And don't forget, you can also visit us on Facebook and at powerandmarket.com. Thanks again for watching.